Ladies and gentlemen, it is now time. The moment that almost everyone is waiting for. Lunchtime. Welcome to the $45 million studio on top of the Empire State Building.
TMUS T-Mobile expects TFB to deliver double-digit service revenue compound.
Hope you're not trading this trash.
2023 to 2027.
But if you
service
are,
revenue growth anticipated to accelerate a compound annual growth rate of about 5% at midpoint from 2023 to 2027. That is TMUS T-Mobile.
All right. We got 9 minutes to go. We're going to take a look at... Fix my mic. We got about 8 minutes to go before we get the Fed interest rate decision. The market currently is pricing in about a flip-flop. Looks like we're 100% getting a rate cut. That's pretty much priced in. What we're not pricing in, though, quite to perfection, is whether it's going to be 25 basis points or 50 basis points. And then how's the market going to respond to all of this? And the press conference, which we'll have up here live on the stream. Yes. Alrighty then. Let's take a look at the markets here before we get this Fed interest rate decision. Jump into it. The S&P 500 is up flat on the day. It's up 0 basis points, and it's also down 0 basis points. Obviously, the market's waiting for what the Fed is going to be doing. We've been chopping around back and forth. Market net flow, for the most part, we have a bullish divergence, so we do have more activity to the upside versus obviously to the downside when you look at cumulative net premiums for calls and puts. Take a look at the zero-date structure. There seems to be quite a bit of action at 56.25. I think that we're going to be seeing this all change here, obviously, in a moment. As far as the zero-date levels go, that started in the early morning session. We had 5,700, which happens to be a pretty big gamma exposure level too, outside of just being a zero-date level. We have 56.25, which is that bigger level we just talked about over here, 56.25. So a lot of focus in and around this area. We still are
to announce endorsement decision for president on Wednesday. That's coming from the union.
We still have up in positive gamma territory. We're at that 55.90. 5,600 is local support. And then we had some interesting level down here at about 55.50. And that was early morning trading session there. As far as the NQ goes, look at NASDAQ futures. It's been just choppy all day in and around its opening range. It's only first 30-second opening range. So it's below that right now. We'd obviously want to get above that. But what we'll do here is when the announcement comes, we'll be anchoring some volume weighted average prices just to see and given a good idea if anything does set up for potential trades. I'm going to probably just let the market digest it for quite some time. Maybe
ahead of the rate decision.
Maybe use like a 10, 15 minute window there.
5 minutes.
Alrighty. Some water. Okie dokies. Take a look here at chats. What's up, FT? What's up, Exotic? My thought is he's probably not going to surprise the market, so probably just go with the 50 basis points. But then again, why? What's the point of it? If data doesn't support it, which he's been talking about that, so obviously they see something
poll,
that...
Teamster Union says poll of members shows 58 supported Trump versus 31% for Harris.
Got the news squawk going on in the background. Whoo! Exactly, Tex-Mex. Okie dokie artichokes. All right, we're about 4 minutes out and we'll get this data, see how the market responds. We'll be watching both the NQ and the SPX. We'll be looking at both sides here. We'll also flip around. We'll look at bonds and stuff like that. Take a quick gander at the market, see how they're anticipating it. I'm not going to be active as far as trading goes right out of the gate. If something pops up, maybe I'll take a look at it. I'm just keeping an eye on my overall portfolio, and then we'll go from there. If anything, I would imagine that the Fed is just going to do the 25 basis points. But who knows? Who knows? If that is the case, I feel like that would be just more of a surprise to the market, you know? All right. Take a look at the dollar, see what the dollar's up to. Dollar's holding in there. What's up, monkey? Hey, monkey, is that monkey? The monkey that I know? Hopes the market goes bananas. All right, we got 2 minutes for this to come off. Is anybody putting positional bets, like directional bets, on right now? What's going on, everybody? Okay, so as it's coming out, we got about 2 more minutes. I want to actually pull up right now the S&P 500 expected move. What is the market anticipating as far as risk goes right now?
1 minute to the Fed rate decision.
We have about today we still have about $56 priced of movement. This is pretty large, pretty darn large. I just want to take a look at skew too, because if I look at the chart of skew's up there as well. So you got people definitely hedging. Volatility, I'm not going to look at VIX. I'll look at VIX futures. VIX futures is up. Well, actually, I don't know if I adjust for contract changes here, but volatility is a little elevated.
S&P futures ticking higher.
All right, here we go. Three seconds. There it is.
Fed lowers discount rate 0.50.
There you go. 50 basis points of a cut.
To 5%.
That's what the market anticipated. Look for 5,700 potentially as the first tag.
11-to-1 for the Fed funds rate action. Fed officials see Fed funds rate at a median of 4.4% at the end of 2024, 3.4% at the end of 2025, 2.9% at the end of 2026, 2.9% in the long run. See unemployment rate of 4.4% at the end of 2024. See PCE inflation of 2.3% at the end of 2024. S&P futures getting a pop here now. 57.4375, up about 41. Again, the Fed lowering
Here
the
comes the
discount rate
5,700
50
tag.
basis points.
Not too far off. So they went for the full 50 basis points, did what the market anticipated. There's the 5,700 tag.
S&P futures continuing.
Market net flow still remains to be bullish.
Move to new highs, 57.50,
Now,
75.
what we'll see here is if we watch this anchor volume weighted average price and see how price digests in the short term. These are only 30-second candles, but you can use, obviously, different ones. This is the initial reaction, obviously.
S&P futures now
Nice
up
big pop.
54. The Dow futures up 330. NASDAQ is up 190. Crude is up 13 cents at $70.09. Gold is up $12.50 at 2603.40. Bitcoin futures up 700.
Here comes the back test right now of just the anchored volume weighted average price from the Fed announcement. Kyle's mentioning that the first move is not always the right move, and that's true. The market has to digest it. Remember, we ran right into that gamma exposure level, which was a lot of exposure at that 5,700. Doesn't mean we can't break through it or anything. Let the market digest, see what it wants to do. We'll see if anything changes from a market net flow perspective and so forth. I'm going to take a look into my portfolio, just check everything out. Like I said, I don't have any shorts on. I said this on the last episode. I don't have any shorts on. And I had a big cash position, but I had a lot of feeler positions out there. Yeah, my portfolio likes what's going on for right now, at least. S&P 500 is up today about 70 basis points right now. And we're doodling around the Fed, I'm just going to call it the JWAP, Jerome Weighted Average Price, NQ. This is NQ on the 30-second time frame. I'm just watching it very closely here just to see if anything changes. We can break out into the minute or 2 minute, but so far this is the first kind of back test of that anchor volume weighted average price since the tag of 5,700 on SPX.
Coming up at 2:30, Fed Chair Powell will be speaking at the
TLT
press
is
conference.
Coming off here, seeing a little bit of volatility there in TLT. Semiconductors saw a big spike on this news, just like everything else. IWM loves rate cuts. This one saw a pretty large move as well. Potentially breaking out of this sort of trend line. Qs, I want to bring up Qs. Qs is on the day, it's not moving much, but we're still within this compression pattern, trying to make some sort of a break. So if the market likes it, hey, there's a possibility we do run, and that would be a positive sign for the S&P 500. If we look at SPY on the daily time frame, we're just doodling around. It kind of if you're in the intraday time frame, it's it's noisy. But if you just look at the day time frame, there's not much going on right here, right now. Take a look at oil. I gotta figure. Let me fix this. Adjusting contract changes. I want to remove those. Where is that at? I don't want to see those events. There we go. Oil's seen a well off of the lows for trading session for crude oil. Okay. Yeah, we'll listen to what Powell has to say still. So right now we're trading underneath the JWAP. The JWAP is the Jerome Weighted Average Price, and we're kind of making a U-turn here, right? Sometimes these U-turns can be quite beneficial to go retest these highs. So if you're trading this, I mean, first and foremost, it's very volatile. So make sure your position sizing makes sense to be able to trade this stuff. Because, you know, the NQ, if I pulled up a DOM right now, you know, you're probably shopping around like back and forth. When it becomes more volatile, the spreads kind of open up too. Makes it very difficult to trade. So I like to wait for things to calm down a bit, or just use very, very small positioning to play these type of moves. Okay. Now this 5,700 level that was tagged, I want to go back over here to net gamma. If you look at net gamma, 5,700 was this level right here. That's why we pointed it out and saying this could be where potentially where it gets held up at. Now, if we start holding above this, obviously the call wall would be at 5,750, which would be until we get the full, you know, option expirations and so forth to see how structure changes. This would be kind of the ceiling there for the upside. Beneath us was that 5,600, and 5,600 basically anything below that I'd be watching out, but above it would be the more bullish sign, even 5,650 at this point now. How do I see the OPEX and futures contract expiry affecting the market? So we're getting tight right here on the 30-second time frame. So we might be getting a little bit of a move here in a very short order. It's just really tight right here on a very short time frame, right at that VWAP. So if we start breaking from it, we can come retest these highs. If we start breaking down from it, just watch out to come potentially test this prior swing low here. As far as the option expiration goes, it's a big one, right? We have a $3 trillion notional coming off. I don't know how it's going to affect the market because I don't know what they're going to be doing, if they're going to be rolling their positions, cutting them, or what's going to happen. So what I like to do, especially during contract rolls, I personally like to let the market digest and work itself out. And I don't really get too aggressive from an intraday perspective. I typically let these weeks pass. And then I might go back to day trading. But right now, the way I position my swing trading portfolio is I have some feeler positions out there, right? So nothing too high of a risk. I have a pretty decent sized cash position just to protect what I currently have as far as the gains for this year, okay? So there's that move there that we just kind of discussed, how it's kind of getting tight here, and we saw it was a breakdown to just test this prior little low here. So as it stands, we're trading underneath that volume weighted average price. So I'd be cautious here up until the point where we could potentially get back above that specific level there for NQ. If I go into market net flow is still bullish. You have the cumulative net premiums for puts coming off, calls going up, markets digesting, getting the volatility. It is what it is. Let me go by change, by strike here. 567 and then 565. So 565. This is a massive candle. Let's take a look at the daily expected moves. So one, we have not hit the weekly expected move yet. I would imagine that we're going to probably be touching these at some point, right? But yeah, we came up into our upper daily expected move, missed it by a few cents. We're just kind of backing off from these levels. All right, we have the Fed coming up to talk here at about 2:30 p.m. Eastern Standard Time. So we'll be putting that up on the board and watching that. Keep on watching the NQ, just these markets here. What is that blue line? What did I draw over there? Oh, that was weird. What is that thing here? Oh, that's anchor volume weighted average price. I'm like, what is that thing? Little blue line there. JWAP is funny. Yeah, I know. Yeah, I talked about that one long time ago. All right, so this is very common of a big report, right? The market just digests. You get an initial reaction, and then you get the digestion, and that's what we're getting right now. So right now, I mean, what are we doing? I mean, right in this current moment, the average volume that was traded since the announcement, we're currently under that, right? So the people that were long are now, based off of the volume in that time, are underwater, okay? And this is normal, right? We can fly right back up, or we can completely collapse itself back down. So I would just be watching that VWAP, and then the high candle right here could be another one to watch. So see this high of the announcement, it kind of is in line with the daily volume weighted average price, but you can see if I remove the JWAP, you can see that it held as resistance here, held as resistance here. So this one would be that level, obviously, to watch and see if price can break back above it. If it does, then we might have some sort of a trade setup. For if you're bullish. If you're bearish, I mean, it's under it right now. Yeah, trading options around this would be probably pretty crazy. I mean, especially if you're initiating new positions. If you had some spreads or whatever, if it makes sense. Me personally, I just kind of let it go, let it digest, and go from there. Jay Powell.
U.S. seeks up to 6 million barrels of oil to help replenish strategic petroleum reserve. That, according
We're
to
back to the opening range here. Big reversal off that 5,700 there on S&P 500.
futures pulling back now. Up right now.
We're back to the opening range there in NQ. Practically unchanged since the announcement. I'm curious to know why they would be cutting 50 basis points. Like that's the market wanted that. They anticipated it. They ran it up. You can see the bond market do the same thing. But why 50 basis points if we're getting data that's stronger than usual, right? If everything's so strong, why bother cutting? Because the idea was to be watching the data. Now, my guess is they see something potentially in the rate of change that things are slowing down. And they're saying, yeah, now we got to get ahead of it. We got to get ahead of what's going on. But they're starting with 50 basis points. So
S&P futures now turning negative.
That is a huge wick. That's a huge wick. All right, we're below the opening range, practically, once again, unchanged on the day. S&P 500 up about 12 basis points. These are large candles, okay? So just don't get your head chopped off in this. Don't try to be averaging in, or averaging, trades. If you're trading futures right now, just be calm. If things set up, it'll work, but it's a little too dangerous, to be quite honest. And if you're trading NQ or ES, maybe move to micros, right? If you want to survive, right? You can make a lot, but you can also get cut off a lot. But the only thing that you can control is not really how much, price goes in your favor. It's just how much you're willing to lose is what you have control over. Okay? So on my last video, I talked about the 3-month yield curve, or sorry, the 3-month yield, U.S. Treasury yield, and how it tracks obviously the federal funds rate. So that one came off. That one's probably, it gave us insight to the market, just like the 2-year yield did. So it's going to be interesting to see if that starts uninverting from the 10, the 20, and the 30. All right, so let's take a look at some of these sectors. Why did I pull up SoFi? I didn't even type in SoFi. I typed in utilities. So utilities made another new high today. It's well off the highs though from this report. I want to take a look at XBI. XBI is holding up. XBI is holding up rather well. XBI still looks like it's getting ready for a move. Okay. Energy. Another higher low right now. XLY. XLY hit a new high for the year today. That's I mean, that's a positive sign. Industrials, new high today. Semiconductors, obviously well off the highs. XLC, that was a new high yesterday. What just happened? XLV, holding up rather well. A new high yesterday in materials, tech, just like NQ, or just like Qs, you know, holding up rather well here. It is kind of consolidating right in this area. Real estate, pennies from its high. Financials not too far off its high for the year. Consumer staples a couple of days separated. Everything's doing rather well. All right, we're back above the opening range here. Still chopping around, just a lot of volatility. Five-year U.S. Treasury note seeing a little bit of a bid here. 10-year Treasury note, a little bit of a bid there. You can look at 10x CGI, TNX CGI too. 10-year yields near the lows of the trading session. TLT. And TLT is holding up rather well here, to be quite frank. We're seeing a lot of volatility, but it is holding up so far. The dollar dropped very hard. So let's take a look at some of the economic metals like like gold and copper. Gold is running, it's up 1% right now, making a new high, a new all-time high, breaking from this consolidation, continuing to break out. I'd imagine copper's okay with the dollar down, but we'll see. Yeah, copper's holding up rather well here too. Copper's holding, oil's holding up, okay. All right, so here we go. We're right at that swing high anchor volume weighted average price. You can see that we crossed above it. So we'll see here now if we can get some strength back up and see a pop to maybe this was the digestion period. A lot of volatility, but that was the break above the swing high anchored JWAP from the announcement. So it's now above the anchor volume weighted average price from the announcement and the swing high. Okay, so anybody that bought, from the start or here is now technically the average person would be in the green. If it holds, right? If it holds. And as far as zero date action goes, there's still some action over there at 5,700 and 5675, which is 50.75. We're right above that. 5,700 is still above us there too. Jerome Powell's talks in 10 minutes. Market net flow still remains pretty bullish. Cumulative net premiums for puts heading down. Calls still cranking up. Big spread there. Up 48 basis points now on the trading session. If we are going to continue up, I'd be watching that 5,700. And then obviously the weekly expected move on SPY. Right now, market's just kind of digesting, and volume will typically dry up going into the press conference. So we can see some more shaky price action. So just remember that. Jerome Powell can say something and it'll, once again, create more volatility in the markets, okay? Thank you, Juan. Yeah, gold miners taking off. Yeah, I'd imagine so that a lot of these, if silver's taking off too then, if gold miners are, yeah. Silver, nice consolidation. It's kind of holding this trend line here. So if silver is moving up, definitely the miners follow in close suit. So you look at GDX, and GDX is making a nice little break right here too. following suit there. All right, here we go. Holding up decently, right above that volume weighted average price. SA. Oh, I haven't checked that one for a minute. Yeah, we'll pull that chart up. All right, I got about 9 minutes. Take a look at some of these names. Yeah, SA's holding up rather well. This was the original breakout. Got a little bit of a shakeout. Nice little consolidation there in SA, and then yeah, we're getting some follow through there. Not bad. Got KRE, IWM. IWM's 1.42% up on the trading session. Small caps like rate cuts, but if something goes wrong, they like it more when rates go back down to zero. Remember, rates are still pretty high. All right, it's getting a little bit more volatile here as we're approaching the press conference, okay? Yeah, market net flow still looks pretty positive, pretty bullish. Just, you know, this can change quick with what the Fed has to say or do. Yeah, I'm excited also to hear why he's going about 50 basis points, because that does seem quite aggressive. Obviously, we'll see what he does and see how the market responds. I mean, overall, let's take a
gold
quick
futures spiking to the highs now, 26.24, up 30.10 following the Fed rate decision.
We're just floating around this volume weighted average price here, still holding up rather well there. Take a look here really quick at the 30-minute trends on these products over here. We got SPY, that's still above a rising 5-day moving average. We got Qs above it. We got IWM above it, semiconductors. Biotech pulled back into it, seeing a nice little pop there. And then you have DIA too as well. They're above their swing low anchored volume weighted average prices. They're above their month-to-date anchor volume weighted average prices. So it's really nothing to be too bearish about still until we see the change, right? Even if it drops down, boom, like Qs comes down, I'd still be looking for that 5-day to flatten out, to turn around, and then see how it responds. And then, if we're actually getting a change in trend. But right now, market net flow is bullish. The trends are bullish still. So if you're not trying to fight things and you're bearish, sometimes it's best to just sit it out. Right? So you can get lucky, but going into a press conference, you don't know what's going to happen. He can ram this thing up another 100 points with something that he says. Or he can tank it, IWM's holding up really good right here. All right. 5 minutes. Hey, what's up, Jossie? Anybody has this indicator for TradingView, maybe? Which indicator? I manually put on most of this stuff. So like the gamma levels, I had to copy and paste through there. And then these anchor volume weight average prices, those come standard with TradingView, I believe. It's just in the settings right here where you can go in and you can, I don't even know where it's at. Where is it? There it is, anchor volume weight average price, volume-based indicator. Time keeps on ticking, ticking. All right, what's some other names doing? Okay, let's take a look at some of the bigger names. We'll look at the larger market cap names. Apple. Apple's holding up. Apple's up on the day. Coming back from its recent sell-off after the whole Apple News event. Microsoft's down slightly on the day, but it's well off the lows, consolidating this recent run-up. Not all too bad. NVIDIA is also kind of flagging, consolidating here. The 50-day, though, is starting to slope down. The 20-day is starting to slope down. But if we start getting back above here, that opens the door right back up to around 130 for NVIDIA. And who knows, maybe even potentially higher if it wants to do that. But I would want to see the strength kind of appear if that was going to be the case. Goog holding up. Amazon had this little fake out candle here, and then we started breaking above this downsloping trend. Amazon looks like it's holding up pretty well, but the 50-day is still sloping down. So even if it goes up, like I would be looking for maybe a pullback into, an inclining 20-day, and then for the 50-day to start turning around, and then see if it starts to shape back up for a press higher. So I'm not too interested there. Meta was one we talked about that I liked yesterday on the 15-minute time frame. So this is what we were discussing. If you missed that portion, but we were talking about how it was just pulling back nicely and how I'd want to see some strength, right? And then you can have a stop under there, like the level. I didn't trade it. I traded it the prior day, but you can see that we broke out. It held this. It pulled back, so maybe another stop can be updated. We're getting some follow through there. So Meta's holding up rather well. It looks strong, and it looks like it's going to start trying to take out a new high for the year, or potentially is that a new all-time high? It might be a new all-time high. Yeah, I believe it is. I mean, we're a stone's throw away. Oh, how do you shade that in TradingView? Okay, I'm being asked about the moving averages in TradingView. The moving averages in TradingView, I actually just coded it. I saw trader Brian Shannon post it on X, and I was like, oh, that's cool, because I'd been using the 5-day moving average too for quite some time, but the visual of it like really kind of helped clean things up. So I just coded it myself, myself and ChatGPT. Some basic knowledge can do it. I shared it for TradingView. I shared it in my Discord. I've shared it on Twitter too, but I just posted the code in like a lump sum. So you'd have to go to my Twitter and like look for that. I replied to somebody's post. They're like, "Can you share it?" And I just posted it there. But I said you got to run it through ChatGPT and be like, "Hey, can you format this correctly for me so I can put it into Pine Editor or whatever?" And then they're like, "Yeah, thanks, it worked." All right, we got 1 minute till press conference, and it's holding up above these average prices right here. So, it doesn't look horrible. I'll lower the volume for right now. All right, press conference is up. You might want to just go like this.
Fed Chair Powell beginning his news conference. Powell said, squarely focused on our goals.
Oh, man. Give me 1 second, people.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and
this is just the
intangibles
speech.
has
It's gonna
picked
be
up
interesting to see,
from
about
its
the questions.
anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the
Really
past
kind of holding
year.
this area. It's getting nice
In
little
our
level
summary
right
of
here.
economic
You're
projections,
trading
committee participants generally expect
right there.
GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up, but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a half percentage point
Oh,
to
there's some volatility.
4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the
Let the
economy
market
and
do
the
its
labor
thing.
market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions.
Right back at the volume weighted
meeting by
average
meeting.
price.
We know that reducing policy restraint too quickly could hinder progress on inflation.
Saw a
At the
nice little
same
breakout
time,
right there
reducing
from
restraint too
827
slowly
up
could
to
unduly
about
weaken economic
866,
activity
about
and
30
employment.
points there. So you definitely have to
In
manage
considering
risk, or you're
additional
going to get it
adjustments to the
sloshed
target
around if
range
you're
for
day
the federal
trading
funds
this.
rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and
Coming back into the opening
3.4%
range.
at the end of 2025.
Leon's saying, did I put a clickbait
These
title?
median
If I
projections
did, it
are
was an
lower than in
accident.
June,
I meant to
consistent
write
with
a
the
Fed
projections
interest
for
rate
lower
decision. So if I wrote
inflation and
Fed
higher
rate hike
unemployment,
decision, it's
as
probably
well as
just
the
a
changed balance
dyslexic
of
part
risks.
on my part.
These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will
Happens to me
adjust in
quite
order to best
frequently.
promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term
Whoa.
inflation expectations well anchored. Our
One of my-
success in
one of my
delivering
stocks
on
is
these
taking
goals
off right
matters
now.
to all Americans. We understand that our
I
actions
just
affect
refreshed
communities,
my portfolio.
families,
I'm
and
like, what the
businesses
heck is
across
going
the
on
country.
here?
Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price
Beyond.
stability goals.
It's up
Thank you.
7.6%
I look
today.
forward to your questions.
So I originally took this position
Steve
right
Eastman,
here
CNBC.
on this
Thank you, Mr. Chairman,
pullback,
taking our questions.
took some off right
In
here,
July, you
and then
said
just
you
held
weren't
in.
necessarily thinking about a 50. You didn't
This
want
was
to
like a
be
13%
specific,
gain,
but
and now it's
you
up
were
about
thinking about a
7% right
50.
now. So wondering what was going on there. I just
Inflation data
refreshed my
last week
thing,
came
and I'm
out a
like,
little
ah.
firmer than expected. Retail was strong. Third
here
quarter
comes the
GDP
questions.
running 3%. So what changed and made the committee go 50? And how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market?
Yeah,
and
we'll
I
pull up
guess should
silver.
we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
So, okay, a lot of questions in there. Let me jump in. So, since the
questions
last
in
meeting, okay, the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. And so we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and
How
third?
do we make the, sorry, thank you, sir.
So
How do we
volatility came
figure
off
out
as far
in
as
the
implied
months ahead, is there
volatility
another
from about
25 or
80% to down to
50 coming in?
62.
Based
Still
on what
has
shall we
roughly
make
about a
that call? Thank you.
$37
Sure.
expected move on the day, but going into tomorrow, there's a $60
things.
expected move.
A good place to start
tomorrow.
is the SEP.
a lot of
but
volatility.
Let me start with what I said, which
Don't rule
was
anything out
that
right
we're
now.
going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where
Not
we are
cut
now
someone
and where
might
we
be on
expect to
position.
be. And that process will take place over time.
I don't
There's
need
nothing in the SEP that suggests the
+%
committee is in a
position, it might be on.
rush
Don't make
to get this
sense.
done. This process evolves over time. Of course,
I'm gonna go ahead and trim
that's
that.
a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go
Position
quicker
maybe
if that's
not even
appropriate.
2%.
We can go slower
It's a
if
small
that's
position, but
appropriate. We can
still
pause
made-
if that's
made a big
appropriate.
difference, that little
But
pop.
that's what we were contemplating. Again, I would point you to the SEP as
some of
just
that
an
off.
assessment of where of what the committee is thinking today, what the individual members rather of the committee are thinking today, assuming that their particular forecasts are realized.
Go to Chris.
Hi,
The worst
Chris
position
Rugaber,
today is Zoom
Associated Press.
video,
Thank
which
you.
is one of the charts that I like the most.
The projections show that the Fed,
Not
Fed
the
officials
most, but
expect the
I
Fed
did like how
funds
it was
rate to
setting
still
up.
be above their
I'm down
estimate of
2% on
long-run
that
neutral
position,
by
which
the
I'll
end of
probably end up
next year.
cutting a little. Actually,
Does
I'll
that
take a look at it
suggest
right
you
now.
see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it
I literally
suggest
missed
that
getting
maybe,
stopped out by
people see the short-run neutral
basically
as
4
a
or
little
5
bit higher
cents.
than- Thank you.
I think the way I would really characterize it is this. I
Whatever.
think people write down their estimate, individuals do.
Guess I'll keep it.
I think every single person on the committee, if you ask them what's your level of certainty around that, they would say
Target
there's
is
a wide
one of my
range
better
where that
positions
could
today.
fall.
Oh,
So
no,
I
sorry.
think we
Let me
don't know.
fix
There
this.
are model-based approaches and empirically based approaches that
Beyond,
estimate what
Tesla
the
is
neutral
actually doing
rate
pretty
will
good
be at
today
any
for me.
given time. But realistically,
looks like it's
we
kinda
know
coming
it by
off,
its
floating
works.
around.
So that leaves us in a place where where we expect, in the base case, to be continuing to remove restriction.
Tesla's
And we'll
right
be
at
looking
around
the
that
way
level
the
that we called
economy
out here.
reacts to
That's just
that.
been resistance
And
and
that'll be guiding
support.
us in our
So
thinking about the question that we're asking at every
I'm just
meeting,
gonna
which
hold that in
is
if
our
that's
policy
the
stance the
initial
appropriate
stop.
one?
We'd
We
have to look
know,
to see where the
if
stop
you go
is.
back, we know that the
it might have
policy
been under
stance we
here.
adopted in July of
I might update
2023
that,
came at a time when unemployment was 3.5% and inflation was
market goes,
4.2%.
some of these bigger names could
unemployment
kind
is
of play a big role in
is up
that.
to 4.2%. Inflation's down to a few tenths above 2. So we know that
Although,
it is
it looks like I
time
already trimmed
to
some positions, so
recalibrate our
guess it's not
policy to
incredibly
something that is
necessary.
more appropriate given the progress on inflation and on
Target is one of my
employment
better performing
moving to a more
positions today.
sustainable level. So that the balance of risks are
I
now
did take
even. And this is the
profits,
beginning of
a
that
little bit of these
process.
already, but it is
I
doing pretty
mentioned
good
the
today.
direction of which is toward
Let's take a look at Costco.
a sense of neutral. And we'll
pull it back a
move
little
as
bit,
fast or
Walmart.
as slow as we think is appropriate in real time. But what you have is our individual
NQ is back into
accumulation
the
of
opening
individual
range.
estimates of what that will be in the base case.
Below the anchor volume weighted average price from,
Howard?
I mean, we're just flat on the day right now.
Howard Schneider with Reuters. How close was
Still
this in
letting Powell
terms of
talk.
decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. If you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut and left it open. And I think we left it open going into blackout. And so there was a lot of discussion back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision
so.
that the committee voted on. So I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year, all 19. That's a big change from June, right? 7 of them wrote down 3 or more, and 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that, now that this is in the books, can you give us some guidance as sort of follow up to Steve on the pacing here? Would you expect this to be running every other meeting once we get into next year? For
Yeah,
example?
we're going to take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really, frankly, a sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, make a good, strong start, but And I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
Gina. Hi, Chair Powell. Gina Smilek of the New York Times. Thanks for taking our questions. You and your colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
So, again, the labor market is actually
You're welcome,
in
Brian.
solid condition. And our
They cut
intention
rates.
with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
All right, we're still trading around that volume-weighted average price from the announcement. Boom, boom, and it's a lot of chop. So there's really no directional move right here.
Nick Timmeros of the Wall
This
Street
is
Journal.
just the
Chair
market
Powell,
digesting.
Does today's action constitute a catch-up in action given recent substantial revisions to the
Market
employment
net
data?
flow is still bullish, but we
Or
are
is
losing
this larger
convergence.
than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
Okay. Multiple questions in there, but so I would say we don't think we're behind. We do not think we think this is timely, but I think you can take this as a sign of our commitment not to get behind. So it's a strong move. Sorry, your other question was?
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient.
And these down candles are
about-
just pretty rough.
about
I
reducing
know
the
that it's a
policy
very
rate. We've waited.
small
Other
intraday
central
time
banks around
frame.
the world have cut many of them
Because
several
I'm just
times.
watching the structure of
We've
kind of how it
waited,
works around
and
the
I
volume
think
weighted
that-
average
that
price.
patience has
But
really
from
paid
this smaller
dividends
time
in
frame,
the
I mean, you
form
get
of
some
our
decent
confidence
moves
that
up like
inflation
nice,
is
but then all of a
moving
sudden this
sustainably
big
at
red
2%.
candle comes and joins the party.
So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think
All
about
right.
it in terms of the base case.
Clean
Of
this up a
course,
little bit. What we'll do
happens
is we'll
will
make an
happen.
opening range
So
of
in the
the
base
announcement.
case, what you see is look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving
We'll do a
at the
15-minute
pace
opening
that
timeframe.
we think is appropriate given developments in the
Or 30,
economy and
whatever,
the
it's the
base
same
case.
thing.
The economy can develop in a way that would cause us to go faster or slower.
That is the range
that's what
that
the
we
base case
should
says.
be paying attention
If
to.
I could follow up on the balance sheet. In
But,
2019, when
to
you
get a
did
little
the
bit more
mid-cycle
tactical, you can watch
adjustment,
the
you
anchor volume
ceased
weighted
the
average
balance
price.
sheet runoff.
Okay.
With the larger cut today,
This is the-
should there be any
the
signal
range
inferred about how the committee
announcement.
would approach end state on the balance sheet?
5-minute, 10-minute, whatever.
policy.
These are 30-second
So,
candles, so it's basically the
in
opening
current,
range, or the range of the
situation,
announcement
reserves
was
have really been stable. They haven't
in a
come down.
minute
So
and a half,
reserves
2
are
minutes,
still
you know,
abundant.
but we haven't
and
broken
expected
from
to
that.
remain
That's
so
how
for some
tight this
time.
range is.
As you know, the shrinkage in our
Pretty
balance
crazy.
sheet has really come out of the overnight RRP.
I know it's a
So
lot of
think what that
volatility,
tells
but
you
within
is
such a short period of
we're
time.
not thinking about stopping runoff because of this at all. We
I'm actually
know
gonna
that
hide the opening
these
range
two
here,
things
just
can
looking at the chart a
happen
little
side
bit.
by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Colby?
Thank you. Colby Smith with the
So
Financial
maybe if we
Times.
break
just
one of
following
these
up on Gina's question on
hold and get a
rising
couple closes
unemployment.
below it, we'll
Is it
get a
your- is it
more
your view that this
decisive
is just a function
move of
of
the
a
market.
normalizing labor market amid improved supply? Or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. Meant by many other measures, the labor market has returned to or below 2019
back.
levels, which was a
I'm gonna leave this
very
up,
good,
obviously.
strong labor market, but this is more sort of 2018, 17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
And just on the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So our plan, of course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that, and we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
Michael McKee with Bloomberg TV and Radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
No, we're going to be watching all of the data, right? So if, as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandates.
S&P 500's up about 50 basis points.
We have greater confidence now that
Gold came
inflation
off a
is
little
moving
bit.
down to 2%, but at the same time, our plan is that we will be at 2%, over time. So, and policy, we think, is still restrictive, so that should still be happening.
I'm just curious as to how sensitive you'll be to the labor market, since you forecast we are going to see higher unemployment, and it is going to take a significant
Gold's seen
amount
some
of
volatility, you can see here.
monetary easing to just maintain it.
So, what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%. But we have a dual mandate, and I think you can take this whole action as take a step back. What have we been trying to achieve? We're trying to achieve a situation where we restore price stability without the kind of painful increase in unemployment that has come sometimes with disinflation. That's what we're trying to do. And I think you can take today's action as a sign of our strong commitment to achieve that goal.
Rachel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You're describing this view that you don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single
easy
most
question.
important one probably. You're at 4.2%. That's, I know that's higher than we were used to seeing numbers in the mid and even below mid threes last year. But if you look back over the sweep of the years, that's a very healthy unemployment rate. And anything in the low fours is a good labor market. So that's one thing. Participation is at high levels.
See what I mean about the red candles? They're just a little bit more heavy duty in
adjusted
size.
for demographics, for aging.
We're not far from breaking this.
Participation
it's getting pretty tight here.
That's a good thing. Wages are still a bit above.
Just show you some structure here.
wage increases
I
rather
wouldn't go
are
off of
still
this
just
like
a bit
fully, but
above
you can
where
see that we
they
kind of
would be
have
over
this
the
higher
very
low, or
longer
this lower
term
high
to be
right here.
consistent with 2% inflation, but they're very much coming down to what that sustainable level is, so we feel good
A
about
little
that.
higher low there. So you can see prices
Vacancies
kind of
over,
contracting here, getting
per
a lot tighter,
unemployed
which
is
really
back
is just
to,
trading around
but
its
still a very
volume
strong
weighted
level.
average
It's
price.
not as high as
You
it
even
was.
take this and
That
just
number
move it up
reached
to
2
here.
to
yeah.
1, 2 vacancies for every unemployed person, as measured. It's now below around, it's around 1, but that's still a very good number, I would say.
Impressive.
You know, quits have come back down to normal levels. I mean, that could go on and on. There are many, many employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change, particularly over the last few months. And, you know, so what we say is, as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased. And because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect to learn between now
Definitely
and
not trading,
November
as you
that will
said.
help inform the scale of the cut at the next
Yeah.
meeting?
I'm not interested in
You know,
trading it
more
either.
data,
unless
the
someone just
usual.
very clear sets up for
Don't
just
look
a
for
little
anything else.
scalp, but
We'll see another labor
rather
report.
just
We'll see another
wait it out.
jobs report. I think we get we get a second jobs report on the day of the meeting, I think. Or no, on the Friday before the meeting. And inflation data. We'll get all this data. We'll be watching. You know, it's always a question of look at the incoming data and ask what are the implications of that data for
Bitcoin's
the
seen a little bit of a
evolving
move, right?
outlook and the balance of risks, and then
IWM's
go
getting
through our
pretty tight right
process
here,
and think
too.
what's the right thing to do. Is policy where we want it to be to foster the
Bitcoin.
achievement of our goals over time? So that's what it is, and
I'm just
that's what
looking
we'll
at
be
Bitcoin
doing.
Futures. Up at around 61,000. Right back to
Hi, Chair
the
Powell.
day.
Neil Irwin with Axios. We've only been running a little above 100,000 jobs a month on payrolls the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, you know, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come through job losses?
So on the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed the unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also watch carefully. So it does depend on what's happening
Still
on the
long
supply
FT,
side.
nice.
And on the beverage curve question,
Anu,
yes. So
2024. Welcome
we
to the
all
channel, man.
felt on the committee, not all, but I think everyone on the committee felt that job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into
Look at your number
higher
one goal
unemployment,
as a trader.
job loss.
Investor.
Yes, I think
trader,
we are. It's hard to know that you can't know
swing
these things
trader,
with great precision,
day
but certainly
trader, intraday
it
trader,
appears
whatever.
that we're very close
Your
to
number
that
one
point, if not
goal
at
is
it.
to protect
So
your
that
capital
further
and grow it
declines in
over time.
job
The number
openings
one goal is
will
to protect your
translate
capital.
more directly into
Sometimes
unemployment.
the best choice for
But it's
protecting
been-
capital is just not to
It's been a
trade.
great ride down. I mean, we've seen a lot of
Your number one goal is not
tightness
make,
come out of the
make,
labor
make.
market in that form
Because if you
without,
focus on making,
it
you
resulting
end up
in,
looking at
lower
charts
employment.
and you just find opportunities wherever and whenever.
Thanks, Chair Powell. Edward Lawrence, Fox Business. So we've heard some speculation that
So
you may
you
be
need to
going with the federal
know
funds rate
when
to
it's time to
3.5, maybe under
execute,
4%.
and when it's
There's basically
time
an
to
entire
just let
generation that
things
has
play
experienced
out.
zero or near zero federal funds rate. And
You are in a
we're heading
rush.
in that direction again. What's the likelihood that cheap money is now the norm?
You'll have
So
some
this is a
good
question.
wins.
You mean after we
but
get
if
through
you're in a
all of
rush,
it?
you'll get
It's
caught
just
slipping.
Great question that we can only speculate about. Intuitively,
Do not
most
wanna get caught
many
slipping.
people anyway would say we're probably not
Especially
going
if
back
you're
to that
trading
era
like
where there were trillions of dollars
futures.
of sovereign
Really
bonds
anything,
trading at
right?
negative rates, long-term bonds trading at negative rates.
Position sizing
And
is one of
it
the
looked
only
like the
things that we,
neutral
one
rate
of the
was-
few
might
things that
even
we
be
have
negative.
full
So
control
there was
over.
people were
You
issuing
don't know how
debt-
far it's going to
issuing debt at
drop, how
negative
high the
rates.
market's going to go
It
up.
seems that's so far
We don't
away
control
now.
that. So focus on what you can
My
control
own
to
sense
become a
is
better
that
trader.
we're not going back to that. But, honestly, we're going to
What
find
you
out.
buy, when you
But,
buy it, how much of it you buy it, and when you sell it.
It feels to me, and that the neutral rate is probably significantly higher than it was back then. How high is it? I just don't think we know. It's, again, we only know it by its works.
And one more, how do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivations?
Yeah, so, this is my fourth presidential election at the Fed, and, it's always the same. We're always
Back at that
going
5650
into
on
this
S&P
meeting in
500, which happened to
particular
be
and
the local level of
asking
gamma.
what's the right thing to do for the people we serve.
Below
And
5650,
we do that, and
might go to
we make a decision as a
5625.
group, and
I
then
look
we
at 0
announce
to
it. And that's always what it is. It's never about anything else. Nothing else is
5625 looks
discussed.
to be that main level,
And,
so that would be
I would also point out that the things that we do
marked
really
out on the
affect
screen if you
economic
have that- if
conditions
you have
for the
that
most
ability to
part
do so.
with a lag.
5625 on my screen is right down here.
Nonetheless, this is what we do. Our job is to support the economy on behalf of the American people. And if we get it right, this will benefit the American people significantly. So this really concentrates the mind, and it's something we all take very, very seriously. We don't put up any other filters. I think if you start doing that,
testing the
I don't know where to
lows
stop. And so we
from
just
the
don't do that.
initial announcement.
Jolene. Thank you, Chair Powell. I'm Jolene Kent with CBS News. My first question is, so very simply, what message are you trying to send American
within that
consumers, the
range
American people, with this unusually
from the
large
initial
rate
announcement.
cut?
I would just say that, the U.S. economy is in a good place, and our
That was
decision
probably
today
the
is
biggest
designed to keep
trend
it
that
there.
we've seen so
More
far, as
specifically,
far as
the
the trend
economy's
movement
growing at a
goes,
solid
other than
pace.
the start, which
Inflation
was
is
only
coming
a minute
down
and a half.
closer to our 2% objective over time. And the labor market is still in solid shape. So our intention is really to maintain
S&P 500
the
is
strength that
now
we currently see in the U.S. economy.
down on the day,
And we'll
but,
do
I
that
mean, let's
by
be honest,
returning
it's
rates
flat, basically,
from
right
their
now.
high level, which
8
has really
basis points
been,
down.
the purpose of which has been to
There's
get
the test
inflation
of the
under
lows
control.
from the
We're
announcement.
going to move those down over time to a more normal level over time.
Just a quick follow-up to that. Listening to you talk about inflation moving meaningfully down to 2%, is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
No, we're not. So inflation.
Forget about the range.
What we say is we want inflation, the
Okay,
goal is to have
well, then you just
inflation
got your
move
face a
down
little
to
bit ripped right
2%
there if you forgot about
on a
the range.
sustainable basis. And, we're not really, we're close, but we're not really at 2%.
Don't shorten the
And I think
hole.
we're
Let
going to
it-
want
let
to
it
see
do
it
its thing.
be,
Put in a lower
around
high and
2%
so
and close to
forth.
2% for some
And
time.
then go from there.
But we're certainly not doing, we're not saying mission accomplished or anything like that. But I have to say, though, we're encouraged by the progress
Right
that we
back to
have
that.
made.
Hi, Katerina Saraiva with Bloomberg News. I just would love to know kind of how the committee is thinking about the
Yeah,
persistence
SBI is
we've seen in
still
housing
holding up.
inflation. Do you think you can return to 2% with housing inflation where it is? Yeah.
So housing inflation is the one piece that is kind of dragging a bit, if I can say.
Watch for 5625.
We
That
know
would
that
be the
market
S&P 500
rents
level
are
on the
doing
downside
what
to
we would
watch.
want them to do, which is
Market
to be
net flow,
moving
we
up
lost
at relatively
convergence.
low levels. But they're
Even though net
not
premiums for
rolling
puts picked up a
over.
little
The
bit.
leases that are rolling over are not
Little
coming
uptick there.
down as much,
No
and
convergence,
OER
and
is
then
coming
the
in high.
calls
So,
came up a little bit.
it's been slower than we expected. I think
500's
we now understand
flat
that
on the
it's
trading
going to
session
take some
still.
time for those lower market rents to get
Right at
into
the
this.
week-to-date
but,
anchored volume
you
weighted
know,
average
the
price
direction of
after
travel
tagging
is
into
clear,
the upper daily
and as
expected
long
move.
as market rents remain
Not exactly, but
you know,
a few
relatively low
pennies
inflation
off.
over time, that will show up. Just the
enough.
time it's taking now, several years rather than just one or two cycles of annual lease renewals. So that's, I think we understand that now, but I don't think the outcome is in doubt. Again, as long as market rents remain under control, the outcome
Underneath
is
the
not
JWAP,
in doubt. So
underneath
I
the
would
swing
say
high.
it's the rest of the portfolio, or of the elements that go into core PCE inflation have behaved pretty
Take
well.
a look. So
You know,
as we talked
all-
about
they
these
all have
lower
some
highs,
volatility.
you had higher
We will
lows,
get down
you get
to
this
2%
compression
inflation,
pattern,
I
and once we
believe.
make a
And
substantial
I believe
break,
that
we can have that little bit of a
ultimately
move.
We'll get
Okay?
what we need to get out of the housing services piece too.
Some of your colleagues have expressed concern that with starting to cut rates, you could reignite demand in housing and see
56.25
prices go up even more.
is about
What's the likelihood of that?
10,
and how,
12
how
points
would you
away right
react
now.
to that?
So the housing market, it's hard to game that out. The housing market is in part frozen because of lock-in with low rates. People don't want to sell their home, so because they have a very low mortgage, it'd be quite expensive to refinance. As rates come down, people will start to move more, and that's probably beginning to happen already. But remember, when that happens, you've got a seller, but you've also got a new buyer in many cases. So it's not, obvious how much additional demand that would make. I mean, the real issue with housing is that we have had and are on track to continue to have not enough housing.
Market is
And
currently
so
trading
it's going to
underneath its
be, challenging.
range
It's hard to
from
find
the initial
to
announcement.
zone
That
lots
range
that are in
lasted.
places where people want to live. It's all of the aspects of housing are more and more difficult, and
About an hour.
where are we going to get the supply? And this is not something that the Fed can really fix. But I think
the
as we
initial ranges just
normalize
started
rates, you'll
within the
see the
first
housing market normalize.
2
And
minutes.
I mean, ultimately, by getting inflation broadly down and getting those rates normalized and getting the housing cycle normalized, that's the best thing we can do for householders. And then the supply question will have to be dealt with by the market and also by government.
Victoria. Hi, Victoria
Let's take a
Blue,
look at
Politico.
SPX,
Just
implied
following up on
volatility,
some
see
of
if
the
this is
labor
coming off at all.
market talk earlier.
Still have about a
monetary
roughly
policy
$31
operates
expected
with
move
long
price,
and
and so
variable
implied volatility is
lags.
still high.
And I'm wondering how much you see
Going
being
into
able
tomorrow, we
to
still look at
keep the
$58
unemployment
expected
rate
move,
from
which is also
ra-
very
ra-
high for a
raising
single
too
day.
much.
Sometimes that's a
comes
whole
from
week
the
of
fact
implied
that you're
volatility
starting
right
to
there.
act now, and that's going to give people more room to run versus just the labor market is strong.
Not too far off of that
And then
56.25
also,
level.
if I could, following
This
up
could be a
on Nick's
pinning area
question,
if we come down there. Just by looking at 0
do
day, you
you
can see
see
this
today's 50
56.25.
basis
There's
point
not much
move as
underneath that.
partially
So this
a
can
response
act
to
as
the
that
fact
level
you
of
didn't cut
potential
in
support,
July, and
or
that
kind of
sort
a
of
pin
gets you
where
to the
price
same
goes
place.
back and forth and through and
So
around
you're
that
right
level.
about lags, but I would just point to
Still
the
above a
overall
rising
economy.
5-day
You
moving
have an
average there,
economy
too.
that is growing at a solid pace. If you look at forecasters or talk to companies, they'll say that they think 2025
what that is.
should be a good year too.
Or what this is.
So there's no sense that the U.S. economy is basically fine. If you talk to market participants, business people who are
basically
actually out there
fine.
doing business. So I think,
why cut?
I think our move is timely. I do, and as I said, you can see our 50 basis point move as a commitment to make sure that we don't fall behind. So you're really asking about your second question. You're asking about July, and I guess if you ask, if we'd gotten the July report before the meeting,
Just to
would we have
be
cut?
clear here,
We
people,
might
we're
well
seeing
have.
some volatility, but
We
the
didn't make
S&P
that
500
decision,
is down a
but,
whopping 10 basis
we might well
points.
have. I think that's not,
Be real
that
right now.
doesn't really answer the question that we ask ourselves, which
Let's
is
get a
let's
1%,
look,
2%
at
move,
this
and then we'll
meeting,
get some
we're looking
real,
back to
real craziness
the
going
July
on.
employment report, the August employment report, the two CPI reports, one of which
More than
came,
1%. I would like to see
of course,
more than
during
1%.
blackout, and all of the other things that I mentioned. We're looking at all of those things, and we're asking ourselves, what's the policy stance we need to move to? It's clear that we clearly, literally, everyone on the committee agreed.
So after
that
this
it's
little
time to
break, we can
move.
anchor volume weighted average
It's
price at
just
the break.
how fast do you go, and what do you think about the path forward? So this decision we made today had broad support on the committee, and I've
On this
discussed the
down
path
candle
ahead.
here. Kind of watch that for a potential back test at some point.
Thank you, Chair Powell. Elizabeth Schulze with ABC News. Mortgage
kinda
rates
held
have already been
resistance, so
dropping
this
in
could be
anticipation
from the
of this
start of this kind
announcement.
of
How much
trend
more
here,
should
shorter term
borrowers
trend.
expect those rates to drop
These
over the
sometimes can
next
get
year?
retested.
Very hard for
You
me
want
to
to
say.
see it
That's
hold if
from
you're
our
bearish,
standpoint,
and if it
I
breaks
can- I
through,
can't
then it
really
can come
speak to
back up and
mortgage
obviously
rates. I will
test some other
say,
key levels.
that'll depend on how the economy evolves. Our intention, though, is we think that our policy was appropriately
Oh
restrictive.
yeah, the meeting's still going, people.
We think that it's
Anything
time
can
to
still
begin
happen.
the process of
That's why I'm not trading it. I could care less about a
recalibrating it
100-point move in
to
the
a level
NQ.
that's more neutral rather than restrictive. We
Doesn't
expect
matter
that
to me.
process to take some time, as you can see in
And the
the
S&P
projections
500
that
being
we
down a
released
whopping
today.
12 basis
And
points.
as
I'd
if-
like to
if
see it
things
all
work
up,
out
but
according to that forecast,
I also don't care if it
other
goes
rates in
down
the
because the
economy
more
will
it
come
goes
down
down,
as
the
well.
more opportunities
However,
that come.
the
Even if
rate
it
at
goes
which
up, I mean,
those
there's going to
things
be more
happen will
opportunities
really
that arrive
depend on
across
how
the board. So
economy
getting wrapped
performs.
up
We
into
can't
the
see-
intraday stuff,
We can't look a year ahead and know what the economy is to be.
it's not going to matter tomorrow, because if you're just an
What's your
intraday trader,
message
it
to
matters
households
right
who
here
are
and now.
frustrated
I'm primarily
that
a swing
home
trader.
prices have still stayed so high as
But I will
rates
take
have
day
been
trades
high.
if the setup
What do you say to
makes
those
sense.
households?
Well, what I can say to the public is that
Right now, it doesn't make sense for me to trade.
we had we had a burst
I'm
of
not gonna risk my
inflation.
capital. Rather just chill.
Many other countries around the world had a similar burst of inflation. And when
Prices
that
consolidating
happens,
underneath that
Part of
range.
the answer is that we raise interest rates in order to cool the
Still holding
economy
above
off
that
in order to
56.25.
reduce inflationary pressures.
I'd like to see that
It's not
56.25
something
tagged.
that people experience as pleasant, but at the end, what you get is low
Flush some more
inflation
trades
restored,
out,
price
and
stability
then go from there
restored.
and maybe see if there's a
And a
quick
good
scalp sort
definition of
trade
price
setup
stability is that
sets up.
people in their daily decisions, they're not thinking about inflation anymore. That's where everyone wants to be, is back to what's inflation. You know, we just keep it low, keep it stable. We're restoring that. So what we're going through now really it restores, it will benefit people over a
Being
long
asked
period of
that,
time.
does anybody think
Price
that
stability
in an
benefits
election year the
everybody
Fed
over a
will
long
let the
period of
market
time, just
break?
by virtue of the fact
I
that
mean,
they
they
don't have
did
to
in
deal with
2000.
inflation.
They did during
So
the Great
that's what's been
Financial
going
Crisis.
on.
That's what happened.
And I think we've
It was an
made real
election year.
progress. We don't tell people how to think
Actually,
about the
they cut
economy,
rates on
of course,
September
and
18th.
of course, people
The
are
same day.
experiencing high prices as opposed to high inflation.
then.
And we understand that's painful.
There's that retest of that anchor volume weighted average price.
Greg.
See right here?
Hi, Chair Powell. Greg Robb from MarketWatch.com. I was wondering if you could go through, you said just at the beginning that coming
It's pretty
into the
common to see that.
blackout, there was like an open thought of 25 or 50. You know, the Fed could move either 25 or 50. I would sort of argue that when we had those two last speeches by Governor Waller and New York Fed President John Williams, that they were sort of saying that maybe a gradual approach was going to win the day. I mean, I sort of want to ask a 7-part question about this, but I mean, could you talk, would you have cut rates by 50 basis points if the market
No, they
had been
cut rates
pricing in
September,
low odds of
18th.
a 50-point move like they were last Wednesday? You know, after the CPI number came out, it was a really small probability of a 50-point cut. Does that play in your consideration at all? Just talk a little bit about that. Thank you.
We're always going to try to do what we think is the right thing for the economy at that time. That's what we'll do. And that's what we did today.
If we get through this anchor volume weighted average price and can hold that for a couple hits and just start to turn back around,
Thank you,
it's
Chair
very
Powell.
likely we
Simon
can come
Rabinovich
test
with The
these
Economist.
anchor volume weighted average
You've
prices
mentioned how
again.
closely
This
you're
is
watching the
volatility
labor
for you.
market, but you also noted that payroll numbers have been a little bit less reliable lately because of the big downward revisions. Does that put your focus overwhelmingly on the unemployment rate? And given the SEP
I'm not
projection
trading
of
it.
4.4
I'm not quick
basically
enough right now,
being the
especially on
peak
the
in the
live stream.
cycle, would going above that be the kind of thing that would trigger another 50 basis point cut?
So we will continue to look at that broad array of labor market data, including the payroll numbers. We're not discarding those. I mean, we'll certainly look at those, but we will mentally tend to adjust them based on the QCEW adjustment, which you referred to. There isn't a bright line. It will be, the unemployment rate's very important, of course, but there isn't a single statistic or a single bright line over which that might move that would dictate one thing or another. We'll look at each meeting, we'll look at all the data on inflation, economic activity, and the labor market, and we'll make decisions about is our policy stance where it needs to be to foster over the medium term our mandate goals. Yeah, so I can't say we have a bright line in mind.
Matt Egan.
Thanks, Chair Powell. Matt Egan from CNN. I know that you discussed earlier how the Fed does whatever the right thing is.
If the markets were
and
going to
nothing else
break, they're going to
factors in.
break.
But in general, can you talk
People
about whether or not
under
you
the
believe
conditions that
a
I've
sitting
shown
US
multiple
president
times
should have
they'll
a say
break when you're
in
underneath
Fed
a flip
decisions
line, a
on
gamma flip
interest
line?
rates? Because that's something that former President Trump, who
Okay.
obviously appointed
They might
you,
start to break
has
before then.
previously
That was going to be the case,
suggested.
but it will be
And I know
under
the
that
Fed
flip
is
line, which would put
designed
caution
be
to everything.
independent,
And then markets will
but
break
why?
when they're
Can you tell the
underneath a
public
declining
why you
5-day
do
moving
that?
average.
So
So
important.
there's always, if
Sure,
you're a
so,
swing trader, that will give you the warning signs.
Countries that are
He'll tell you when to get in, when to
democracies
get out.
around the world
when to, or not even
countries
get in,
that
get
are
out
sort of
fully,
like
just
the United
when you
States
take your foot off the
all
gas
have
and
what
when
are
you put
called
your gas,
independent
when you
central banks.
put
And the
your
reason is
pedal to the
that-
metal
that
again, you know?
people have found over time that
We'll update
insulating
those
the
again here
central
too
bank
in a moment.
from direct control by political authorities avoids making monetary policy in a way that favors maybe people who are in office as opposed to people who are not in office. So that's the idea, is that, you know, and I think the data are clear that countries that have independent central banks, they get lower inflation. And so we're not, we do our work to serve all Americans. We're not serving any politician, any political figure, any cause, any issue, nothing. It's just maximum employment and price stability on behalf of all Americans. And that's how the other central banks are set up too. It's a good institutional arrangement, which has been good for the public. And I hope and strongly believe that it will, you know, continue.
Kyle Campbell for American Banker. Thanks for taking the questions, Chair Powell. A couple regulatory
S&P
developments
500 went back and they actually retested the.
First last week, Vice
Whoa,
Chair
that guy's got a
Supervision
style,
Barr
bro.
outlined
Look at that
his
guy's
views for
style.
The changes to the Basel III endgame.
Got the mustache,
Wondering
the
if you
kinda curly
are
perm
in alignment
mullet.
With him on
Dude, he
those
parties.
changes should be, if those
For
have
sure.
support on the board in a broad way that you're looking for, and if you think the other agencies
I'm an
are
American
also
banker.
fully on
He
board
just
with
looks
that
like an American
approach.
banker from like the
And then
80s.
yesterday, other banking regulators.
You know what, hold the second question.
Okay, sure.
Let me we'll give you the second question. So the answer to your question is that, yes, those changes were negotiated between the agencies with my support and with my involvement, with the idea that we were going to repropose the changes that Vice Chair Barr talked about, and then take comment on them. So yes, that is, you know, that's happening with my support.
And is there a date for that?
That's not a final proposal, though. You understand? We're putting them out for comment. We're going to take comment and make appropriate changes. We don't have a count that I don't know exactly where that is, but the idea is that we will move as a group to put this again out for comment, and then, you know, it'll come. The comments will come back 60 days later, and we'll dive into them, and we'll try to bring this to a conclusion sometime in the first half of next year.
Right. And then yesterday, there were merger reform finalizations from the other bank regulators. Well, what does the Fed have to do to align itself on merger?
You know, I would bounce that question to Vice Chair Barr. It's a good question, but I don't have that today. Thanks.
Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said earlier that the decision today reflects with appropriate recalibration. Schonberger with Yahoo Finance.
Has anybody seen Silicon Valley?
You said earlier that the decision today reflects with appropriate recalibration strength in the labor
show.
market that can be maintained in the context of moderate growth. Even though the policy statement says you view
Russ
the
Hanneman
risks to
definitely would
inflation
say this
and
guy.
job growth as roughly balanced. Given what you've said, though, today, I'm curious, are you more worried about
Meaning?
the job market and growth than inflation? Are they not roughly balanced?
No, I think, and we think they are now roughly balanced. So if you go back for a long time, the risks were on inflation. We had a historically tight labor market, historically tight. There was a severe labor shortage, so very hot labor market, and we had inflation way above target. So, you know, that said to us, concentrate on inflation, and we did for a while, and we kept at that. The stance that we put in place 14 months ago was a stance that was focused on bringing down inflation. Part of bringing down inflation, though, is cooling off the economy and a little bit cooling off the labor market. You now have a cooler labor market in part because of our activities. So what that tells you is it's time to change our stance. So we did that. The sense of the change in the stance is that we're recalibrating our policy over time to a stance that will be more neutral. And today was, I think we made a good, strong start on that. I think it was the right decision, and I think it should send a signal that that we're committed to coming up with a good outcome here.
Is the economy more vulnerable to a shock now that could tip it into recession?
I don't think so. I don't, as I look, well, let me look at it this way. I don't see anything in the economy right now that suggests that the likelihood of a recession, of a downturn is elevated. Okay, I don't see that. You see growth at a solid rate. You see inflation coming down, and you see a labor market that's still at
any
very
trades
solid
in? No,
levels.
I'm been watching this consolidate.
So I don't really see that. No.
LOL.
Thank you.
Seb. See, Seb Fox knows. All right. Meeting's been over there. So now price is just kind of consolidating here. We're underneath the volume weighted average price from the announcement, initial announcement, and from the swing high of that announcement. I anchored a volume weighted average price on this kind of just little quick trend here. And you can see that when we popped above it, we saw a little pop, and now it's kind of just floating in and around that level there too. We did come outside of it. So now let's see if the market wants to break or come back up. Right now, it looks like it's trying to break through. So we'll see how the market digests him coming off stage. Let me pull up here. I'll turn back on my news squawk just in case if they're saying anything. All kinds of stuff happened. Powell did state that he didn't see anything in the economy right now that suggests a likelihood of a downturn. I mean, would he say if there was, though? Would Jerome Powell actually come out and be like, yeah, I see something that's going to be potentially causing a downturn, that's why we're going to do it? I don't think that would ever be the case, right? Like, why would that be the case? Unless if he's legitimately, like, trying to get the... I feel like that would spark too much fear for him to ever say, so why would he bother saying that, right? You know?
S&P futures right now trading down about 7. Dow futures down 38. NASDAQ down 23. Crude is down 54 cents. Now gold down $8. Bitcoin futures up 260.
Got a new car yesterday. Traded in the old Betsy. Not my car. I'm keeping my car. Got a new car for my wife. New family car. The other one had 120,000 miles on it. Had a lot of stuff going on that we needed to get fixed, especially if we're driving our child around, you know. And the damage that was done for just us to fix the car, because that was the idea. I wanted to just fix the car. They said it was going to cost $12,000, and I just looked at them. I said, yeah, I'm not really interested in that. How much would the trade-in be? They're like, we'll give you $1,000. And I said, you suck. You suck. You suck. We had a 2013. It was a little bit older. 120,000 miles on it. Range Rover Evoque. It was great condition, but it needed some service and stuff like that. Probably new tires too. So we decided to get, for the first time ever, which I don't know why I was so against them, but when I drove one, I was like, it's fun. But we got a Model Y, just a base model Model Y, and I'm going to keep my combustion engine because I like that. But yeah, she's got that. Now we're trying to learn that vehicle. It's pretty cool. And it was, you know, it was a good, fair price, brand new vehicle. We'll see. She likes it so far. It's weird to get used to them, but. Oh, yeah, he said, KK said, get a Toyota. Yeah, I know, 12K, right. I know, but that's what they told me. It was more than 12,000. It was 12,500 or 700 or something like that.
Double lines Gunlack.
We're still trading around this range from the announcement, man. This is some tight price action. Still no really big decision here. Tesla insurance is super high. Really? Maybe I got to check with my my prior insurance then, because everyone's been telling me that it's been a little bit better of a price. So I went with them without even checking my other insurance. So, I mean, the insurance on my vehicle is $45 a month. Mind you, I don't really drive it that much, but She tries it like a grandma. Yeah, I was interested in the Mach-E though. I was interested in checking that out, but it wasn't really for me. This car wasn't really for me. So kind of just went off of. I mean, so she really wanted the Range Rover, like Sport or whatever it's called, but I'm like, dude, not a chance in heck that I'm going to be buying that car. You know, for you to drive it to work. It's crazy. And she knows that too. Because I mean, she would be also, you know, buying it too, but not a chance in heck. Those things are ridiculously expensive and it's just, I don't know. It's just maybe her style. It's never been my style though. Here comes the back test of the volume weighted average prices there in NQ. We're back in the basically middle of that range. Yeah, Okan saying, please stay away from anything Range Rover. We've heard that from some people, but then we've also heard from other people that are like, oh, they last forever. Ours went 125,000 miles with no problems, and then we had to, you know, we came up to like get some service done where it was like there was a leak on the turbo that wasn't causing any damage, but they said to get fixed that and to fix these bushings, just regular maintenance stuff. It was going to be super expensive, and that's when we just like, yeah, I think we're just going to dump it. I looked into some other EVs, and I actually prefer some of the other EVs. They look great. Pawan, I was wondering about the whole new Model Y too. Yeah, that's why we just went with the super base model though, on what we currently got, because if we end up really liking the vehicles, or you know the electric or maybe a new hybrid, I'm still going to probably end up getting another vehicle myself. My car is pretty much toast. It's coming up on the end of its life too. But I just don't drive much, so it's not been a big priority. It's all. All right, we're making a little bit big of a rip back over here, back to the volume weighted average price, back to potentially back testing this little breakdown here. Really, we're just in the middle of the channel since the launch, so we're just getting chopped up to smithereens, at least if you're trading this. I saw some people trading it, getting hella pumped for shorting it, and then it's ripping the faces right back off. This is what happens in volatile environments, people. If we don't have a strict trend, like, you're just going to be, go long, I'll go short, I'll go long, I'll go short, I'll go long. Oh no, it's going to fade. It's like, first off, I'm looking at a 30-second chart over here. S&P 500, this is a 30-minute chart. Let's look at the daily candle.
White House says U.S. is not involved in the device blast yesterday or today in Lebanon.
S&P 500, I mean, we hit a new all-time high today. So like, that's not bearish. Hitting new highs is not bearish. It could become bearish, okay? But we're not here to hit the top and hit the bottom. I'm not. Maybe you are. But the reason why I'm not trying to hit the top or hit the bottom is because it's a lot easier to just go from going high to going higher, or from going low to going lower. That is trend trading. So if I look at the 5-day moving average, what are we doing? We're inclining here. So not only are we hitting new highs today, we have a 5-day moving average that's inclining. We also have, let me pull up this chart a little bit cleaner here. A gamma flip line that's down at 55.90. For those that don't know about gamma, the flip line
PYPL,
takes
PayPal,
all the gamma.
JP Morgan note says lots of enthusiasm at our hosted meeting with PayPal CEO.
Right, we're looking at all the gamma.
President Alex Chris in London. That's PYPL.
The dude who's talking, he's like, yeah, I'm just going to talk a little bit slower. So if we look at the time series for net gamma, I'll show you that there's times, so when you're above the flip line, that's positive gamma. When you're below the flip line, it's negative gamma. When you're negative gamma, this is when volatility typically increases, because sellers, they sell into selling, they buy into buying. And then the flip side is when you're in positive gamma, which we are currently in positive gamma territory. It's not an extended reading by any means either, as far as the amount of gamma out there. When you're in positive gamma above the flip line, you buy the dip, sell the rip, buy the dip, sell the rip. Volatility typically reduces. And I can show you very specifically, right? I do this frequently. I've shown it on my stock market brief shows. If I go to the daily time frame, now I'm showing you these gray boxes. What are these gray boxes? Take a look. See this area right here, this area right here, this area, and this area? I'm just highlighting these on the screen. That was when we were in negative gamma territory. So when we're in negative gamma territory, what do you notice happen on the VIX? You notice that it typically volatility increases. All right.
White House said we still believe there's a diplomatic path forward, particularly with Lebanon still involved in intensive diplomacy to prevent a second front from opening up on the border with Lebanon.
Okay. So my point here in explaining this is, yeah, we're getting some volatile intraday price action, but if you zoom out a little bit, we're in positive gamma territory. We're above a rising 5-day moving average. We're hitting new highs in the SPY, not the Qs, but the SPY. Which, you know, that could be potentially a bearish sign, right? Which has been that way in the past, and it's also been that way for more of a bullish sign if the Qs are going up and the SPY is coming down. Could give us some insights.
White House said too soon to know how the device blast incidents will have effect on the ceasefire deal.
Okay. So yeah, I mean the markets, I mean, if you're shorting it, I mean, you're just fighting the tape. Like, I mean, I guess if you're shorting the market, you gotta explain what your time frame is and understand that really closely because, okay, are you shorting it intraday? Okay, cool. It is what it is there. Okay, if you're shorting intraday and you like caught this move and you caught it down, okay, cool, sweet. You caught a little move. You zoom out on a daily time frame, it doesn't even exist. Right? It's nothing. All right. If you're shorting based off of the daily time frame on the S&P 500. You know, any professional is going to look at that and be like, why? Like, why? What's the point of that? Like, what's your thought process there? Right? Because you just hit a new high. It's like, okay, are you hedging? Okay, now your thought process maybe makes a little bit more sense because you have a lot of long positions on and now you're just adding some exposure to the short side to mitigate risk, or you're just reducing your cash or increasing your cash size position to reduce volatility. But yeah, right now, man, it's a blunder of where's the market going to decide? Are we going to break from the upside? Are we going to break back down to the downside? And then from that point, when I want to add more exposure to the markets, I need the market S&P 500 more primarily to be above a rising 5-day moving average, and then also in positive gamma territory. That 56.25 is still that main pin. Not many traders are reaching out further than that, by the way, from a 0-day perspective. Market net flow is still bullish here. Okay, so it's chop. Like back to S&P 500 over here on my left-hand side of the screen. You know, it's still the door's open for anywhere right now, quite literally. Anywhere, anything can happen right here. So when anything can happen, because you see these aspects kind of build on both sides from an intraday perspective, I don't typically trade, but I do like checking in on my swing trades and so forth, which we can do. Utilities is down on the day. Consumer staples is down on the day. Okay, those ones are the two performing sector, the worst performing sectors on the day. Utilities, consumer staples. First off, they're coming up from highs, which makes sense to digest. But two, that means it's fairly a risk-on type day, right? Consumer staples, and then you look at the top of the list, you have consumer discretionary up there, right? Even XLK, well, XLK just went flat negative on the day, but it's basically flat to unchanged. Okay. So good luck trying to get a read on this market. It's a difficult one right now. If I go to the index watch and we look at the S&P 100 and just basically think of this as an advanced decline line, tell me the market's not confused. You have 57 advancing stocks, 44 declining stocks. Right? T-Mobile probably had some news out. That's the worst performing one on the day right now out of the S&P 100. Go to T-Mobile. Yeah, there's probably news. That's a pretty wide range outside bar. Let's see. Strikes a deal with OpenAI. Sets revenue growth target through 2027. It's something to do with OpenAI, I guess. I don't know. But this one's also still in a nice little uptrend. Okay. Let's take a look at some bonds. What are we doing over here in TLT land? TLT is coming off. Means bonds obviously the TNX is catching a bid back to around highs of the trading session. Have this little positive divergence there. So we're seeing a little bit of a pop there. You know, this makes sense to me because if you look at crude oil, what has crude oil been doing? Crude oil has been bouncing. And as we know, crude oil actually typically leads the 10-year yield. So notice how we had a few days of a bounce there. And if I go to TNX CGI, the 10-year yield, this one's been kind of going down, kind of diverging. So this right here would have told me, like, yeah, if you're trying to buy TLT right now and then, right, it'd probably be time to wait and or fade the potential move recently, because it looks like because it's seen a bounce and 10-year wasn't following, we may see a move here. And, you know, I've shown this chart multiple times. I'll bring it up again just so you can see the side-by-side comparison of what it is that I'm trying to kind of walk you through as far as the visual. Let me see here. There it is. There it is. So check it out. The black line is oil. The candlestick chart is TNX. And you can see, like, oil found a bottom right here, started bouncing up, okay? The 10-year yield followed shortly after. Oil found a top, started going down. 10-year yield followed shortly thereafter, all right? And then what do we see here? Oil started catching a bid. 10-year yield today, it's following shortly thereafter. So oil is such an important, you know, it's such an important aspect to the global economy, not just the U.S. economy. And it's been giving us some great insights into where, you know, yields may follow. Actually, some of my trades that I posted on TLT was based off of this chart. I've posted that in the trade ideas multiple times.
Double Irons Gunlack on CNBC says now the Fed is not so far behind the curve as they previously were.
Well, cool, man. Cool. All right, so 56.25. I still think that would be some sort of a idea for the S&P 500 today, just based off of the zero-date levels. Market net flow doesn't support that all too much, but the price of SPY is not really moving with market net flow right now, as we got that great convergence. Do got a 565 magnet, and then below us 560. Oh no, 563 is actually above us. Okay. 563, man, that level is an interesting one. That was a big level yesterday too. So let's do this. Let's draw out 563. I think that maybe that might be the key. Once again, let me just settings. I'm going to bring it back a little bit further. Okay. Yeah, so this 563 level, I'm going to just make it orange and kind of bigger. Did we just pop up from that level? What the heck? I move fast. Let me just make sure that it's still there. Yeah, 563. Change. So as it's from a zero-day perspective, I mean, this was a big level too yesterday, but green can repel price. So if we're above 563, I would look for price to try to repel further to the upside. If we start cracking underneath that in the short term, unless this obviously changes, which it can, I would think that price can start pressing to the downside. Red bars can act like magnets. So above 563 is a good sign, and you can see now. I mean, if I go into the smaller time frame, look at how when we got above 563, it kind of pressed price back up. So this level, you can see it's acted also as resistance. It acted as resistance, then support. Now we're kind of just dueling around that same level. So it's kind of like this pin taking place in the market right around 563. Under, I'd be cautious. Above, I'd be more bullish. Market's going crazy right now. The market's going wacky right now. I would be very, very careful here. Holy macaronis. Coming into the close, more volume typically comes in. Go to the trade tab. S&P 500 going into tomorrow's move. It's not finalized yet, but the daily expected move is roughly $5.88. That's plus or minus. So from the closing price, whenever we get the initial close, I'll come back in here later and see what the updated move is and post it out on the Discord. And I don't know if I'll make a video today or not, but that's a big expected move. So if you think that like it's going to be an easy ticket for the end of the week, I would encourage you that that's not going to be the case. We're right here, basically where the week started, and we have a wide open weekly expected move. Okay, at the start of this week, the S&P 500 weekly expected move was $10.42, and we have yet to tag either one. And there's always a high probability that we tag it, and we have not yet. Okay, so let's see what the end of the week looks like. Right? When's the weekend again? It's the 20th. Yeah, we have about a $8 expected move. So if I go to SPX, it's roughly around $80. Let me go to the PM settlement. 75.86. So there's still a lot of trade, a lot of open. I mean, it's less than the 100, but you got to understand, it was $100 before we started this trading week. We've traded all the way through Wednesday, and we're 20 minutes till the close, okay? We got through the Fed meeting, okay, which is a big event, the interest rate decision. We're unchanged on the week, basically, and we have still $80 of movement in the next two trading sessions.
Consumer risk.
If you think it's going to be easy to trade that, think again.
Process for review
The way that I personally want to trade that, if I'm trading intraday, is I'd like to catch some big swings, but I'd prefer to have market net flow on my side and catch some sort of a trend. I don't want to be caught in the chop. Other than that, we're above a rising 5-day moving average still. We're in positive gamma territory. So my more tilt would be to the bullish side. But I probably will not add any swing trades at this current moment until we go through the contract roll, until the whole roll is completed. All right, so getting through OPEX and then coming fresh into next week, seeing if the market wants to make its decision, take a look at the structure of gamma and so forth. That's my thought. Hope it helps out. Ben Ski's saying quad witching. It's triple witching. Quad witching is no longer a thing. Although people still call it quad witching sometimes, but it is triple witching. Call it whatever you want, to be quite honest. So just call it OPEX. What's up, Rando? All right. Back under that 563. If you're wondering why, by the way, why I said that, it's no longer a thing. I can't remember the exact date about the quad witching thing. I think it was like in 2020. But I can't quite remember where they got rid of I forget. Single stock futures, maybe. I can't remember exactly, but I do remember reading something like that. You just Google it. Just Google it if you want like the exact terms or be right or whatever. I'm wrong all the time on my terminology, dude. I do not care. All I care about is making money or protecting my capital. You know, that's the most important thing. Give me a second here. Sorry, give me a second here. Okay. All right, guys. So the market's still finishing up that digestion stuff. We're under that 563. Look at, I'm not going to be looking to trade this right now. I'm gonna let the market digest, as I already said. I'm probably not gonna, if I were to day trade, I'd be looking for more of a trend day. I'm not looking to short the market. I could care less. As far as downside goes, we've been saying that 56.25, that would be the level to watch. From a gamma perspective, from a zero date gamma perspective, there's a lot of traders focusing in on that, but they're not reaching further down from that point. Okay. From a total net gamma perspective, I would say that you can be, what the 5650? Where did 5600 go? 5600 basically disappeared. Okay. Well, it doesn't look good right now. 5650. All right. So I don't see 5600 that much. It used to be a bigger wall, but now what I'm looking at right here is 5650. Anything below that, there's not much going on. So I'd say be cautious under 5650 until this updates. From that point, yeah, there's not much going on below 5650, and we are under 5650 as it stands right now, but not by much. Okay. So other than that, 5625, that was a zero date level. We do have some exposure at 5600 as far as gamma goes, but it fell off tremendously relative to the other levels. And then our gamma flip line is 5590. That's all I got really today as we're breaking down from these levels. Maybe I should just wait it out. Should I just wait it out a little bit and see if we get some sort of a break? But I'm not going to trade it regardless. So take a sip of water. I appreciate everyone tuning in. We have approximately about 1,700 people viewing across a couple platforms here. If you haven't done so already, you can subscribe to my YouTube channel. Follow me out on Twitter. I post there. And then I'm also on Twitch if you want to subscribe to the Twitch channel. I do put out market briefs. And then if you're not part of the Patreon, I have a paid version and also a free member version too. The paid version is only $9, but you get all kinds of different benefits. Like you get the whole Tradie Tick suite of bots, Discord bots in there. I do my watch list, my tight list. I give some trade ideas. It's not an alert service, so don't come in there thinking it's an alert service. That's not what it is. I do daily expected moves, weekly expected moves, monthly expected moves, and you have the community access too. But the free membership, every once in a while, I'll post a midday market update. That's just like a quick overview of the markets. Instead of something posted on YouTube, I'll just do it on my Patreon, and that's for free. So, all right, y'all, I'm out. Just be careful, be safe out there. I appreciate y'all showing up. Bensky, see you later. KH, thanks for showing up. Eco, thanks for showing up. Jeff, thanks for showing up. No one knows thyself, thanks for showing up. Can we get a pineapple for the road? All right, yeah, I forgot about that. We'll hop in the pineapple for the road. How about that? We'll hop in the pineapple, dude. We'll sink to the bottom of the sea for all you bears out there that want to be in the sea. Okay, just be careful. Once I do the pineapple, it typically goes the opposite direction. No, I'm just kidding. It lives in a pineapple under the sea. Thanks, Joylyn. Thanks, T-Rabbit. Thanks, EXO. Thanks, FT, for showing up. Thanks, Oscar, Zulfar, Nolan. Appreciate you being here. Pawan, Sajed. I'm sorry if I pronounced that incorrectly. Mike, ZQ, thank you for showing up. Swiss, Hugh, Monkey was here earlier. Thank you. Andy, Bobby, KK, Oscar, everybody. I might be repeating some of these. Tom. And then everybody on Twitter. I don't see who's on Twitter. I know a lot of people are viewing on Twitter. I don't even see a chat for Twitter. But thank you all for being here. Be careful, be safe. And once again, just focus on what you have complete control of. That is what you buy, when you buy it, how much you buy it, and when you obviously sell it. Cool. Toodaloos.